This is Ag Matters PM from the Iowa Agribusiness Radio Network, brought to you by the Iowa Soybean Association, your daily recap of the information that affects Iowa's farmers, producers, and consumers, right here in the heart of the heartland. With reports from our award-winning broadcast team of Dustin Hoffman, Riley Smith, and Mark Magnuson. Now, from the IARN studios in Des Moines, here's Dustin Hoffman.
Good day, everyone, and welcome to Ag Matters PM from the Iowa Agribusiness Radio Network. I'm Dustin Hoffman. Today is Wednesday, April the 5th, 2023. We're so glad you could join us. Coming up a little later in this program, I talk with Jim Sutter of the US Soybean Export Council, and we talk about the state of the economics of exporting our soybeans around the world. We'll also have a check at that spring-like ag weather outlook. But first, let's run down the markets. It's time now for the Ag Matters PM Closing Market Summary, your source for market analysis and settlement prices from the day's trade in Chicago, courtesy of the folks at agmarket.net. Well, we're at the end of another trading day, and we're talking with Kaden Sweeney of agmarket.net. Kaden, what did we see in those grain markets today?
A little bit of an interesting day today for sure. With the 7:45 pause, corn and beans both were down pretty hard. Corn down 7 or so, beans down 10, and then we opened back up, 8:30, and we kind of reversed higher. Things were trading pretty well at 9, and then we slowly have leaked off throughout the day. Currently, corn's trading about a penny lower, beans down about 7. So all in all, if you just look at the chart, not a super major day, but kind of interesting price action as we went through the day.
So what's been the motivator here going forward? I know we're talking about getting planters rolling here soon in parts of Iowa and the southern part of the Midwest, but we still got a lot of winter waiting up north too.
Yeah, for sure. I think you're kind of seeing a mix of, people continuing to digest Friday's report as well as weigh out, what planting weather is going to look like as we get into April here. So I don't know. I think you got a pretty good mix of the two. And I think you're going to see the market kind of wallow around a little bit until we get a pretty firm direction one way or another, whether planting pace is going to be about as normal or a little bit delayed.
How much of it is outside influence? We know the OPEC announcement this last weekend here has really put markets on defense, at least a little bit. I mean, how much is that influencing what's going on in the grains?
Definitely has influence. And even if you look further than that, soybean meal down like $7 a ton today, that's definitely hurting the beans. And we've continued to see the funds, play the game one way or another. We'll get the hogs later, but they just continue to get crushed. So definitely some outside money factors, just kind of overall what the funds want to do and whatnot. But at the end of the day, I think you'll come back to planting and fundamentals eventually.
All right, so moving over to that livestock side of things, let's start with cattle first. What did we see on that complex?
Yeah, really pretty quiet overall. We're lower to begin the week, Monday and Tuesday. We're pretty quiet today, really trading pretty close to even both on fats and feeders. So it kind of seems like we're finding some support there. Hopefully we'll get back to making new highs here soon.
And what about hogs? You kind of hinted at the fact that they're just still grasping for anything to hang on to right now.
Yeah, I feel like I've been on here for 2 or 3 months in a row saying hogs can't find a friend, and we continue to see that today. Down about 140 or so, making new lows again on the June contract, trading around 88.15. So, just continue to make new lows. We gotta find footing somewhere, but I think it'll largely be up to the funds when that comes.
And of course, livestock does get tied a lot to consumer sentiment, and we now know that the economy and the challenges the Fed have coming up is possibly going to, with oil restrictions or not sorry, oil production cuts, and then interest rates. Eventually, this is going to start having the desired effect that the Fed wants, and that's got to keep the livestock producers at least a little bit nervous going forward as well.
Yeah, I agree. You got the overwhelming or overarching, economy overall, but on the flip side too, at least as far as cattle go, if corn's a little bit lower, than it has been the last couple of years, if we continue to see decent planting pace, I think you can make a case that these corn will continue to slip. So, definitely got two sides of that coin, but be interesting for sure.
It's definitely interesting, the double-edged sword we have for those who produce grain and raise livestock, isn't it?
Yeah, for sure. You got to feel for those guys. Yeah, no doubt.
All right. Well, Kaden, I thank you so much for the insight. If folks want to touch base with agmarket.net and find out what kind of options they have available, how do they do that?
Yeah, just go to our website, agmarket.net. Be sure to try out a free trial of our app and our research and we'll kind of get a marketing plan put together here as we enter our growing season.
All right, Kaden. Well, thanks so much for the insight. We'll talk to you again real soon.
Yes, sir. Appreciate it, guys. Thanks.
That again was Kaden Sweeney of agmarket.net. Let's run down the closing numbers courtesy of the folks at Bar Chart. May corn is down a penny at 6.52 3/4. December new crop up 3/4 at 5.60 3/4. May soybeans down 6.5 at 15.11 even. November new crop down 4 at 13.16 even. Soy meal for May $6.80 lower at 4.50.60. Soy oil down 52 cents at 55.22. Chicago wheat down 9 1/4 at 6.94 3/4. Minneapolis down 15 1/4 at 8.74 even. Kansas wheat down 14 3/4 at 8.43 even. July oats down 7.5 at 3.32 3/4. April live cattle were up 80 cents at 168.40. April feeders were down 12 cents at 197.82. April lean hogs $1.17 higher at 73.40. April pork cutouts $1.12 higher at 79.02. And Class 3 milk for April was 2 cents higher at 18.66. And that's been a check of our ag market recap. We're going to take a short break and hear from our sponsor, the Iowa Soybean Association and the Soy Checkoff. When we come back, Jim Sutter of the US Soybean Export Council joins us. This is Ag Matters PM.
Iowa Soybean Association is driven to deliver for Iowa's 40,000 soybean farmers. We're proud to provide objective agronomic research, a helping hand with soil and water stewardship, and timely industry news powered by the Soybean Checkoff. Learn more at iasoybeans.com.
Welcome back to AMPM from the Iowa Agribusiness Radio Network. I'm Dustin Huffman. Well, about this time each year, we sit down with Jim Sutter of the US Soybean Export Council, get a recap of the year that was in the soybean markets globally and what we're looking to accomplish in the coming year. And we had that chance to sit down with him during Commodity Classic in Orlando, and here's what he had to tell us. Talking right now with Jim Sutter of the US Soybean Export Council. Jim, thanks so much for taking time to visit with us again.
Thank you, Dustin. It's a great opportunity to chat with you.
So we always seem to catch each other at the Commodity Classic, kind of get to look back at the year that was and kind of peer into the crystal ball for the next year. And let's kind of talk about, first of all, where things ended up in 2022. We had definitely some interesting situations, didn't we?
We had a lot of interesting situations. So if you look at kind of the scorecard, we were really happy to see US soy exports, beans, meal, oil put together, set a new record in terms of value at just over $40 billion and over 71 million tons of exports in terms of quantity. That was the second highest ever. So great results from a scorecard perspective. You know, and we had a lot of things that we were dealing with. We, of course, had the COVID sort of coming out of that situation, ongoing climate issues, the conflict continued in the Ukrainian situation, making all kinds of interesting things happening. And then, of course, the currency. You know, I talked a lot about the 3 C's to begin with earlier in the year, and then the 4th C that I started talking about kind of halfway through the year was the currency issue. And that became a big problem, and it continues to be a problem today for buyers around the world.
So maybe elaborate a little bit on what's going on from that front.
Yeah. So you know, we have interest rates going up in the U.S. Everybody's aware of that. That is strengthening our dollar because people want to buy dollars to take advantage from around the world to take advantage of those higher interest rates. That strengthens our dollar. So for countries around the world that buy soybeans, soybean meal, all of a sudden it takes more of their local currency. And not only do we have high commodity prices kind of generally, but then this dollar situation makes it even more so. So we're seeing that have a negative impact in some countries around the world. They're either having to limit their availability or their amount that they're purchasing, or because they just have a limited availability of dollars in their country. And I think you may say, where's that happening? Egypt is a place it's happening. Pakistan, some Latin American countries. There are plenty of others, but those are the kind of countries that are facing difficulties with that.
And I can imagine that because, you know, over the last couple of years, we had talked about the growth of some of these emerging markets that we're just starting to see a middle class build, and they're starting to grow, and all of a sudden now you've got a economic crisis again, and that just puts the pressure right back on that basically a very weak, young middle class.
That, Dustin, that sums it up. It's this young middle class that just was trying to, getting their head above water and able to consume meat 3 times a week instead of 2 times a week. Now all of a sudden they're back to maybe once a week. And we see that in the import statistics for soybean meal that they use to produce chicken in their countries. It's down. And so we're facing that.
So now as we look ahead then to 2023, I mean, obviously, economics are they're gonna ebb and flow, and we know that. We knew that we were riding a good high. There's going to be some lower, but now how do you adapt? How do we still get the maximum amount of our exports, around the world in a situation like this?
Well, we've started out, we're not quite halfway through the marketing year yet, but we've had a pretty good start to the year, and we're a little bit ahead of where we were last year at this time, actually. So we're happy about that, and that is despite some of these problems that I've been talking about. I mean, so I think what we have to just keep talking about the differences between U.S. soy and soy in other origins. The quality aspects, the sustainability aspects, the reliability of our infrastructure. We keep hammering those aspects home as we do our marketing around the world. We try to differentiate, we try to build a preference, and of course we want to make sure that we have market access in all of these markets. And I think if we keep doing that, our reliable customers will want to continue to buy U.S. soy. We can't do much about the global economic situation, but we're watching it very carefully, and we're trying to help in any way we can with those kind of things.
And obviously, diversification of our export marketplace, it's something we've talked about a lot. We obviously have our main players, your Chinas, your other countries that are buying a large quantity, but obviously in a tough economic situation, are we still seeing some of those newer emerging markets that we were talking about still buying some? Or
we are. We're still seeing them buy some, Dustin. We're still seeing them buy some. And those that I listed, plus plenty of others, Egypt, Pakistan, Bangladesh, they're all still buying. The Southeast Asian countries, Vietnam, Philippines is an important market. So they're all still buying, maybe down a little bit versus where they were a year ago. Right. So we hope that will pick up. And I'm an optimist, so I don't think I'd be doing this if I wasn't. So I'm optimistic that we'll get inflation under control in the U.S., the dollar will be able to come down a little bit, and also that we'll get this sort of global tension that's there between the U.S. and China and some other countries. We need to get a little bit of the temperature turned down there so we can get the global economy running on a good way, and I think that will help drive demand. So we continue to watch that. Again, I think you mentioned diversification, and we're excited about what's happening in the meal side of things with this renewable diesel demand. That really gives farmers a great new opportunity for diversification of markets, because we'll have about the same amount of beans to export, we project out into the future, but the growing production of beans in this country will largely be crushed, producing oil for renewable diesel, biodiesel, and then we'll have more meal to export. And that'll be going to some new markets, and we're excited about that.
And also, you mentioned talking about how we stand apart from our competition. We don't have to look very far to know our competition in Brazil. They're having a good year. We're hoping that we're finally going to have a good year. I mean, they've had some bad, dry years. No farmer wants to see that.
Right.
But the same token is now they're being able to put a lot of beans into the marketplace. How do you kind of counter that? Obviously you got to remember the quality differences, but what we were able to provide. But what kind of challenge is that throwing at us right now?
Well, that's a challenge, Dustin, that we just have to be ready for. This year it's a little bit balanced. The record production in Brazil and the lowest production in at least 10 years, maybe more, in Argentina. We'll see how that turns out. So the South American crop is turning out to be essentially unchanged with last year, in the year that's about to be harvested. So that is a big crop, and we just have to keep thinking about the advantages of U.S. soy, and we have to be working everywhere we can to build that preference. So as people are buying, they're thinking about more than just the price, and they're thinking about more than just the supply coming out of Brazil, but they're thinking about, hey, I want to continue using that U.S. soy, the sustainability advantage, the quality advantage, those kind of things. It's no different than building loyalty, like for somebody who buys a particular color of tractor or a particular type of food that they like to eat. We need to build that same loyalty for U.S. soy.
Now, obviously, there's things that affect our trade that are beyond the control of the soybean and agriculture industry, whether that's weather, which we knew what was going to happen every month. We'd be sitting in a different tax bracket.
Right.
But, you also had infrastructure issues, getting ports to send containers and get things out.
Yep.
I mean, are we still looking at some issues as far as being able to ship our beans out right now?
I think we've made a lot of progress, Dustin, and things have gotten a lot better. I understand that the availability of containers is much improved versus where it was a couple of years ago. So our container exporters went through some really challenging and difficult times, and our customers around the world also had difficult times. So I think the availability of containers is a lot better. I do still hear some problems, some maybe opportunities for improvement with some of the shipment routes that some of the container lines are taking. So I think that's always, people like to have faster shipments to their destination. In terms of the bulk exports, earlier this year there was the problem with the water in the Mississippi River, or lack thereof, not enough water in the Mississippi River. I think that's back to normal now, so as we get the spring thaw, we'll have plenty of water, so we'll have good flow out of the Mississippi. So I think we're in much better shape than we were a couple of years ago in terms of logistics and ability to meet the customer's needs.
All right, so looking ahead to 2023, what are you excited about? What are you working on here to really make a difference this year going forward?
Yeah, so we're excited about our continued efforts to continue to work to diversify markets for U.S. soy farmers and U.S. industry. So we have a lot of things we're doing there. We've talked about several of those. Continuing to work with the industry that's expanding this crush to make sure we're helping them with their meal marketing plans and getting them in touch with meal buyers around the world. And then continuing to work to build trust with the buyers around the world. We really view that having suppliers trust the U.S. as being a good supplier is critical. Because if you trust somebody, it's a lot easier to do business with them. And we want them to kind of trust the U.S. overall, and then trust the companies that represent the U.S. in terms of being exporters. So I would say those are some of the key things we're doing. One last thing, sustainability. I think I mentioned that briefly earlier, but the U.S. has a real sustainability advantage, and we're trying to make sure that we promote that to people around the world. Because really, wherever you go, whether it's in China or Europe or Japan or Latin America, many other places too, people care about sustainability, especially younger consumers. They want to know where their food comes from. We've now got a tool that you can put sustainable U.S. soy on food products. And we've got now over 1,000 SKUs that are using this in over 20 countries. So we think that's another great way to promote the sustainability advantage of U.S. soy.
All right, well, Jim, thank you again for the update. As always look forward to that every year.
Great, Dustin. Thank you so much.
And that again was Jim Sutter of the US Soybean Export Council. Let's go ahead and run down that ag weather outlook. Well, the sun is starting to shine a little more, seeing a little more blue sky here in Des Moines. Definitely started with some cloudy conditions after an interesting day yesterday. We were sitting at about 45 degrees coming up on 2 o'clock and thinking we're never going to hit 78 to 80. The sun opened up about 2:30, and by golly, we made it to 80 degrees. And then we had those storms roll back in, and we were back in the 30s by the overnight. So we think right now, the way things look, the interesting fluctuations we've been seeing the last couple of days, and of course, concerns and thoughts going out to those who were hit by tornadoes last week over by Iowa City and that general region. But we think that turbulent time is behind us, at least for the next week or so. Here's what the National Weather Service has in store for us for the next 24 hours. Again, we started the day with quite a bit of cloud cover in Des Moines, but peaks of sun have happened throughout the day, and temperatures a lot different than the end of the day yesterday, but pretty much what we saw at the beginning of the day. Temps were only in the mid-30s to the upper 40s. Now tonight, the skies are going to get clear, and it's going to get chilly, and we're going to see lows of 23 to 30 with some breezy conditions. And then tomorrow, it's going to look a lot more like April. Sunny skies, calm weather, and some spring-like temps, and we'll see highs anywhere in the 50s. Now looking at the affiliate weather map for tomorrow, we see Cherokee will have sunny skies in 54, Shenandoah sunny in 59, Des Moines sunny 56, Waterloo sunny in 52, Albia sunny and 55, and Clinton sunny and 53 degrees. For more detailed forecasts in your area, tune to your local Iowa Agribusiness Radio Network affiliate. And that's been your Ag Weather Outlook. And with that, we're at the end of today's show. You can find all our content online at iowaagnet.com. Don't forget to follow us on Facebook, Twitter, LinkedIn, TikTok, and on our YouTube channel. And while you're there, don't forget to subscribe and hit that bell icon so you can be notified every time we put out a new video product. Also, don't forget about our free Twice Daily Market podcasts. You can find them on Amazon, Apple, Spotify, Google, and Podbean. From the IARN studios in Des Moines, I'm Dustin Huffman. For Mark Magnuson and Riley Smith, we thank you for watching. This has been Ag Matters PM.